Welcome to Driven, the Unscripted Success podcast, with your hosts, Mike Menino and Nariman Hamden, bringing you insights and stories on achieving personal, professional, and financial success.
Hey guys, I'm Nariman Hamden, and this is Driven, Unscripted Success podcast. You can subscribe to us on YouTube, Apple, and Spotify. We have a great guest on today. We have Thomas St. John. Thomas is the CEO of Northcorp Capital. He has been in the real estate industry for over 20 years, and he is going to share how he got to where he is today with his start in buying just one single family home that started off as a rental. How you doing? How's
Real
it going,
good.
Tom?
Thanks a lot for having me. I'm excited to be here.
I appreciate you coming on. So why don't you start with just giving us a little snapshot of your business, what you do, and how you got to where you are.
Yeah, so like you said, I've been doing this for 20 years, and probably the first 17 years of it, I kind of did it all on my own. I never really asked for money. I was my own handyman, my own property manager. And I don't know why it took me 17 years to kind of ask for help, but when I had a daughter, and that's what I really wanted to scale. Just being away from her, that kind of changed. She changed. She's my whole life, And so now I do some real estate syndications. I have a network of investors that I'm always continuing to grow, and I raise money for other people's deals too. Real high level, kind of top tier operators that I've vetted and been in contact with over the years, And I probably spend just as much time vetting the sponsors as I do the deal, because I think that's probably the most important part. When you're raising money, someone gives you $50,000 or $100,000. I'd rather lose my own money than theirs. So I'm very careful where I place that money.
Sure.
But before how I started, 2006 was when I bought my first house. I'll tell you, my dad retired like the year before that. He worked 35 years in a coal plant, and they gave him a telescope. And man, that just infuriated me, Like just seeing my dad after 35 years, he got a telescope out of it, It kind of like, it just sparked something in me, So I started reading books, go in the library, and I just read books all the time. And I bought my first house in 2006. I had about 6 or 7 of them before like 2008, before the big crash.
Sure.
But a lot of people talk about the market crash. For me at that time, I didn't care that the market was crashing. I was kind of happy. But the problem was the credit crunch. People don't talk about that as much. It was really, really difficult to get loans to buy anything during that time. And so I just scrapped and clawed, did every crazy thing that I highly would not recommend to anyone now. But I used hard money. I used crowdfunding like Prosper, Lending Club. I used credit cards. I did anything I could to acquire property, which, again, I'm not going to write a book about that strategy because I wouldn't recommend it, but that's kind of how I was able to obtain property. And my goal was always multifamily. That's a whole different business. That's where you really can scale and grow wealth. And it took me till 2015, actually, to buy my first multifamily property, 9 years. And that's why I recommend other people to ask for help a lot sooner. But that was my path,
Sure. But I mean, you ended up getting to where you needed to get. So that's pretty impressive there in itself. So how do you deal with taking risks? Is there a time when rolling the dice really worked out for you?
Well, I rolled the dice quite a bit in the first 7 or 8 years with property. I mean, I knew the deals. I consider myself an expert as far as analyzing a deal. I know what it can rent for. I'm very good with construction and stuff. I don't have hardly any concerns about that missing something as far as the inspection process. But when I was early on, I just did anything I could to buy property. I probably took a lot more risk, kind of overextending myself as far as my time back in those days. But now, as far as I've kind of learned from that and grown a lot. And when I, do syndications and things like that, I really just look at, I do a really thorough stress test on the property. And one of the sayings I've always had for myself is, if I buy this property, A, I have to answer two questions. Can I sell it tomorrow if I absolutely have to? Yes or no? And if I end up having to hold this property for the rest of my life, is that okay? And so I've always wanted to be able to answer yes to both those questions. And it's
Right.
probably that level of being conservative has probably slowed me down maybe, or maybe didn't allow me to grow as fast, but it's also, mitigated risk and kept me kind of just hitting singles along the way.
Sure. And then it's being more cautious with your investors' capital, their money,
That's a whole, that's a
you
whole
know?
different level that's a whole different level of deal analysis and underwriting when someone else's money is involved. I can lose 100 grand and I'll make it back. I'll figure it out. But I'm not losing someone else's money. That's a whole different
Absolutely.
animal.
Yeah, absolutely. So, what's a skill or habit you think doesn't get enough credit for contributing to your success?
For me, I think this will probably be kind of a simple answer for your audience, but I read probably at least 3 books a month. I think it's not talked about as much in today's day and age. There's great information out there, podcasts, YouTube, but I just love to read real estate, and it might not even be something I'm doing. Like the last book I read was about flipping dirt. I've never bought a raw piece of land and flipped it. I don't. That's not my world. But I just like to read about what other people are doing, or to get knowledge about what other options investors have out there.
Sure.
So I would recommend anyone that's starting out, or even someone that's seasoned, is just to continue educating yourself. It doesn't cost very much either.
Right.
I'd
Right.
read.
Absolutely.
Yeah, so
That's,
I would say just to answer your question, yeah, I think people don't read enough.
yeah, I would agree on that. People tend to just go uh, to the quick article or blurps of this or that and not really vet it out, um,
Yeah,
rather than actually go in there and dig into it and actually read about it, you know?
yeah, yeah.
So, yeah, I
Uh,
agree with you on that. So, staying on top of any field is tough. What's something exciting you see on the horizon in your industry, and how are you getting ready for it?
well, right now, as you know, I mean, there's a lot of loans coming due maturity. The 3% and 4% interest rates are starting to go away. You see a lot of that. You see a lot of properties kind of being forced to sell. Maybe people were a little bit over aggressive in the 2021, 22 years, because you could throw a dart at a map of your county and find a good and buy a property. It's not like that now. Right now, I think is like the era, maybe the 5 or 10 year kind of era of operations. You kind
Right.
of, I think that you'll see a lot of operators. The best will come out in this next 5 or 10 years to see how people maximize the effectiveness of their operations. So you really, the cream rises to the top. And I think you're seeing that a little bit now on how people structure deals, how people operate the asset in there's real tough market conditions. It's supposed to be getting a little better, but they've been saying that for a long time. So
Right, right, absolutely. And there is like I mean, a big opportunity with, as you mentioned, loans coming up, the arms coming up to an
yeah,
expiring or whatnot, and the rates are about to go up. So there are a lot of good deals to be had with multi-families and taking advantage of that in itself.
yeah. Even some people that are selling their properties, they a lot of them have a little bit of equity, and that's okay. They can mark it down and chalk it up as a win for their investors. But a lot of these deals, you see, the good ones anyway, people aren't selling they're not selling because they want to, or they're selling because they have to. And so then
Sure.
that creates a motivated seller. And he might have a win for his investors, but they're not. A lot of the good deals you'll see they're not selling at the top. They're selling because they have to.
Right. Makes sense. So how do you encourage your team to think outside the box and bring new ideas to the table?
Well, over the last couple of years, we've really started exploring other markets, and that's kind of been a transition for us. We're used to the Midwest, which isn't like the flashy, fancy stuff that you see like Phoenix, Arizona, or the Carolinas, but but we just found the cap rate compression. The deal is very competitive in those markets.
Mm-hmm.
The deals get skinnier and skinnier, and you have to really know what you're doing. So we're kind of we don't really invest in any kind of anywhere that doesn't have growth, or at least some level of growth. It's hard to underwrite growth in this market, but yeah, I've been really encouraging the people on my team to look at places we haven't looked before. I would say that's the kind of the main transition. And believe me, I don't need to tell my team to come up with their own ideas. They do that on their own without my without solicitation. If you met them.
Yeah, that's great. That's great. So when you're building your dream team, what's the one trait you always look for and why?
That's an easy one. You have to love what you do. I've had a lot of friends over the years that want to invest in a rental property. They saw what I was doing, 10, 15 years ago, but you got to love it. You got to just eat, sleep, and breathe this stuff. And real estate's not always fun.
No.
You have to deal with tenants, banks. I mean, I have a friend that stopped doing it because he couldn't stand having to submit his financial statements to the bank every year. He just hated it. I just hated everything about it. So he got out, thankfully, But yeah, that's the one I look for. People they don't have to be a rock star, but they got to love what they're doing.
Sure. Yeah, absolutely.
I can teach them to be a rock star if they love what they're doing.
Absolutely. So has there been a book, podcast, or someone that's really changed your outlook or approach?
Yeah, I'll give you a couple books as well. I'll give you a recent one and a real old one. The first book I ever read when my dad retired and came home with that telescope, that's what I did. I went to the library, and everyone always talks about Rich Dad, Poor Dad, which I read that, of course. But the book I read before that was a little thin 100-page book called Parable of the Pipeline. And I wish I got paid for telling people that story, but I don't know the guy, so. But it's just a real short book, Parable of the Pipeline, and just talks about two brothers. One dug a pipeline to the village, and the other one carried buckets. Symbolizing carrying buckets. As a W-2 job. That book was real powerful for me. The second book I just read, it's on my shelf right behind me, is Invest Like a Billionaire by Bob Frazier, that just came out pretty recently. Mm-hmm. And it just talks about the world of private alternatives, oil and gas, private credit, in real estate, which is my world. But that book is real powerful to me too, because I don't think, like talking to you, me and you, it's common for us to understand private alternatives. But when you talk to the everyday person, I don't think it's as well known.
Right.
That you can invest in these things. When you drive through your town, you see this 200-unit beautiful apartment complex, and you think, man, who could possibly own that? Who's the guy that owns that? Well, it's people like me and you. It's just 100 of us or 50 of us. Right. It's just everyone that owns a real small piece of it, and I didn't know that starting out. And so that book, I think people should read too. Yeah.
And how do you tackle learning new things, especially stuff that's outside of your comfort zone?
Now I ask for help. I used to not. I used to just say, "Oh man, I'll figure that out when I have to," But now I think, finding a mentor, finding someone who's already had that challenge, and asking them how to approach it. It's the teamwork makes the dream work, right?
Sure.
And when you build up a network of like-minded people, it may not be people that give you money or do you do business with, but joining groups. I've been to a bunch of real estate conventions. I've joined some masterminds just to have a network of people to lean on. And I don't know everything, but I know someone who does. I think that's
right. Absolutely. So what's a day in your life look like, and how do you juggle work and everything else?
Well, I wake up, I struggle mightily to brush my daughter's hair because I don't know how to do that really. And she cries, and the only thing I can do is a ponytail. So that's like the first hour of my day. But I go through emails, of course. I'm pretty active on LinkedIn, and I'm not too active on the other socials. I have Facebook and all that stuff, but I try to make sure I'm interacting with other people out there. But what I really like to do is look at properties, especially I don't care where it's at. I'll drive there, I'll fly there. I meet with the sponsors. I sit down with them, have lunch with them. I meet at their office. I tour the properties. That's what I really like to do. I can analyze the deal. Over the last 18 years, it's become a lot simpler to analyze and kind of pick apart their underwriting. And I have a few things I do to really test their underwriting, like rent assumptions, rent growth. If I don't agree with that, it's really easy to plug in numbers to a spreadsheet, and I can get any IRR you want to see if I'm the one inputting the information. But what I like to do is meet with the people, meet with the properties, at the properties, meet with management. And that's what I spend most of my time doing. I'm like boots on the ground. I can't stare at a computer for too long. So
Yeah,
I like to be like out in the field with interacting with the people actually doing the work.
sure, sure. That
And then
makes
after
sense.
that, then after that, it's a lot of playing with Barbies. You know,
That's nice. How old's your daughter?
she's 5.
Oh, she's little.
Yeah,
That's
she's
sweet.
it's a fun age though.
Yeah. So, what's on the horizon for you? Any big goals or projects you're excited about?
Well, yeah, there's a couple properties in Texas and the Houston area that we're raising money for, and I typically will invest in every. I mean, I don't have enough money to invest in every property that I vet or that my investors invest in, but I'm investing in as many as I can. I always like to tell the investors, hey, this if you go down, I'm going down with you. I got my own money in this one. So there's a couple properties in Houston that I think just a solid operator. I love these guys. So I'm going down there actually in a week and a half to tour the a week and a half to tour that property and meet with the team there. And I actually do have a development going on in Indianapolis that new development isn't really my strategy or what I've focused on in my career, but I have a real good builder that I actually went to high school with that has a real good construction company. And he found a piece of dirt in the Indianapolis area that we're going to be doing some new construction. So that's kind of new to me, and it's pretty exciting. We're not bringing in investors on that. I'm not comfortable with bringing other people's money in on that deal. I want to get my feet wet with it first, but that's something new to me.
That's exciting. And I mean, perfect timing. I'm assuming that's why you read the book recently about flipping land or flipping dirt.
Yeah, I mean, yeah,
It
there's
goes
always,
with it.
yeah, we're building on it, but yeah, just learn about entitlements and easements and
Yeah,
permitting. I mean, that's a
it's a
whole
lot.
different world.
Yeah, it's a different beast for
Yeah,
sure.
different beast.
Um, so, what strategies have you used to ensure both personal satisfaction and financial stability?
Well, real estate is personally satisfying every day. I just love it. Even if I'll analyze deals that I have no interest in investing in, or I just like to do it to see what other people are doing. As far as the strategies to make sure my investors are happy, that's if you focus on helping other people, a lot of things become really easy. So I take a lot of a time and a lot of pride in looking at these properties and making sure that I'm doing the best thing for the investor. I look for a few things with the operators as far as a co-investment, alignment of interests, and I find that I can get a $6,000 paycheck from a job, but it makes me feel a lot better to give an investor a $600 interest check and make a success
Right.
out of it. Yeah, there's just so much. It's very rewarding. And
Yeah,
these,
it's fun.
if I get a phone call from an investor and I know that the deal's going really good, it's great because I know it's good news. He's not calling to complain about his order.
Yeah, there you
You
go.
know?
There you go. That's too funny. Well, as you know, as we're wrapping up this interview, um, if someone wanted to get a hold of you, how does one get a hold of you?
You can find me on LinkedIn, Thomas St. John, or you can look up, I'm on there a lot, or northcorpcapital.com. Just my phone number and email around there. And when you send an email or call that number, that's my phone. I'll be the one answering. If you send an email, that'll be me and I'll be the one responding.
Great. Well, thank you so much for coming on and sharing your story. I appreciate it.
Yeah, it was a lot of fun. I really appreciate you having me.
For sure. And thanks for tuning in, guys. We'll see you next time.
Thanks for listening to Driven, the Unscripted Success Podcast. Want to share your story? Apply to be a guest at drivensuccesspodcast.com/guest.